Hello and welcome to Forex.Academy, the #1 website for Forex and crypto education and analysis. In today's edition, we're going to be looking at assessing market conditions. No matter which markets you trade, but particularly the Forex market, trading conditions change constantly depending on a number of factors, including the time of day, the time of month, and even an hour-by-hour basis. This is dependent on both fundamental, technical, and conditions based on sentiment. On an hour-by-hour basis, because the Forex market has peak trading hours during the European, London, and US session, where most volume is going through the market daily, due to financial news release and change in market sentiment, because hedge funds typically like to rebalance their portfolios at this time and also on a quarterly basis. When these factors are taken into consideration, they transfer onto a trading chart as range-bound, which is also known as consolidating markets. Breakouts, where markets begin to trade outside of consolidation zone, are where these breakouts typically turn to trends. All of these conditions present trading opportunities. Example A is a diagram of a range-bound market with support and resistance. These areas are sometimes called floors and ceilings, and where price action will typically move up and down within these ranges. Sometimes traders refer to this as sideways trading. Example B shows a breakout of a previously ranging market, and where a floor or ceiling has been breached and where price action advances outside of the range. We have added a trend line A, B, C, D, where price action to the upside has begun to fade and where moves have been limited to this new area of resistance. Incidentally, the line continues to be a support move for the breakout at area D, which again proves to be a barrier for the bulls. Example C shows a trending market. In this type of market, traders look for repeated signs such as a bull market or ascending market, and where each high is higher than the previous high, and where each low point is higher than the previous low. The correct terminology is higher highs and higher lows. Here in example D, a bear trend or descending market, the reverse applies, and now traders look for lower highs and lower lows. So, we know what we are looking for: range-bound, breakouts, and trends, in which case, when is the best time to be looking to trade them? Let's consider that you live in the United Kingdom and you want to trade the pound against the US dollar, aka cable. Trading this pair at 11 PM Sunday to Friday would not be a particularly good idea, because the European, London, and US markets will be closed at this hour, and the Asian region traders will be coming onto the market. This could mean that the Asian traders have a different view than the other regions regarding the value of the pound against the US dollar, and which could be the start of a trend reversal. This could go against the technical analysis as inherited from the aforementioned markets. Another reason could be that typically Asian markets at this time might be more focused on their own domestic currencies, such as the yen, Australian, and New Zealand dollar, for example. This would therefore have the effect of potentially leaving cable with little volume and therefore flat. Therefore, the best time to trade the cable would be during the European session, including London. Another thing to be mindful of is the immediate or near-term financial economic calendar, especially when it comes to interest rate decisions, gross domestic product, and on more topical note events surrounding Brexit. However, because currencies are traded in pairs, it is also highly advisable to observe the financial calendar release for the counter-currency, in this case the US dollar. We would also recommend caution when trading any of the major currency pairs when an unrelated pair is about to have an economic-related news release, as this could impact the counter-currency, and it may have a knock-on effect to impact your trade. Here is an example. Let's say that you are buying cable and the European Union announces an unexpected 10 basis points rate reduction. This could cause the value of the euro to fall and cause the US dollar to rise sharply, thus potentially resulting in a knock-on or adverse effect on your trade where you need a weaker dollar and a stronger pound. Please also note that range-bound markets, breakouts, and trends will have a completely different complexion depending on the time frame that the trader chooses to trade with. For example, a 1-minute time frame, which is typically used by scalpers or intraday traders, tends to be more frantic than a 1-hour time frame and will typically offer less movement in terms of pips. Hedge funds, institutions, and governments tend to hold longer views and therefore use longer timeframes such as daily, weekly, and monthly setups. If you enjoyed the video, please like and subscribe, and comment down below if there's anything you'd like us to cover in future, or if you would like to discuss the topics we have covered. Have a great day.